All right, so we got SMCI down about 6% today, and I covered my short for a profit, only about 4.5%. I covered the entire position yesterday in this video, which you guys can go and check out on my X account. And I took the profit today. We're going to go over very briefly why, and we're going to go over exactly where I plan to start shorting again. This is not me trying to time the top like I've said before. This is not me being a perma bear. This is very simple, but yet very effective criteria that has to be met in order for me to take a position short. And the biggest difference between SMCI versus all of the other semiconductor companies was the technical setup. Number one, the fact that we did not take out this all-time high on yesterday's open at that gap and actually close above it. That is one sign right there that there's not enough bullish sentiment or enough buyers to actually push us over that level. The second thing was the fact that today we weren't able to take out that level, and we closed yesterday under $1,100. Those were my three requirements. So if we zoom in now on the 15-minute time frame, we saw this drop off today, and I was going to try to take my profit short down here around $930, which would fully fill this fair value gap that we had from before. But if we actually look at how market structure has been setting up, we can take a Fibonacci retracement and go from this swing low up to swing high, and you'll notice that bouncing right on that 0.618% or that 0.618 Fibonacci level as right usually where we see this turnaround or a short-term bounce, which is why I decided I was going to close out my trade. So now that I don't have any positions open on this, we've hit this 2 times now. The first time was much better, an $18,000 profit or an 18% return. And with this, it's about $5,000 or 5%. So in order for me to go short, once again, I need a couple of things to happen. All right. The first is going to be that we need to see a retracement back up into this Fibonacci level of about the 0.618 again, but this time to the downside. And the reason that we're drawing it like this is we're really going from high to low, or you can go order block to order block. And in most cases, we will see SMCI probably pull back down into $987, test that bullish order block. If that bullish order block holds, then we will get that push back up into 1075, and we will probably fill this fair value gap, look like we're going to break out again, and then at this point I will look to go short. I'm not looking to go short again here because I know something or because I think that SMCI fundamentally is a dog. No, none of that at all. The reason that we're doing this is we're seeing inefficiencies in the market. We're seeing spots where big money should be stepping in, but they're not. And we know that if big money's not stepping in, this thing's not going to continue to move because your everyday retail investor or trader with a broker account, they're not the ones who are actually going to be able to move the stock, contrary to belief. Now, at this point, if we see this push back into this fair value gap, I think that we will probably see this rejection back down, which gives us a 16% move to the downside, and a stop loss around 1177 would give us a 5%, loss to the upside. So at that point, we're already up about $23,000, which is very good. Even if I lose another 5 to 6% looking for that bigger 20% move to the downside, I'm still happy, right? If we're looking at this as a business and we're looking at these sequences of trades as a business, net, even if we take a $5,000 to $6,000 loss, we're still positive. That's all that matters, right? I want you to think about it not as every next trade has to be the best trade ever. I treat this, as much as people will say is, it's not, as gambling. It's gambling. We're using predictive measures to try to look historically and say, okay, there's a better chance that blank is going to happen. But the fact that we can't move the market means that it's gambling. So at the end of the day, when I'm putting a hand size out there or I'm putting a position size out there and I'm setting these stop losses and I'm setting these take profits, it's me just predefining basically my hand in blackjack. What am I willing to risk? At what am I going to hit? What sequence of numbers am I going to hit or stay on? And then whatever happens, happens. That's just how it plays out. And we're not worried about what happens in the next hand. We're worried about how we play over the next 100, 200, 300 hands. So I hope this helps. I'll give you guys a full update at the end of the day. And I'll see you next time. If you want to trade with us every single day as well, go check out our community, which is going to be the second link in the description. Or you can go check out our website, thtcommunity.com. Peace.